Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, September 8th, 5:46 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what's important for next week, and review the world famous 21 over 21 leaders list. Let's get into it. Market state, I prefaced uptrend based on the August 29th O'Neill follow through day with weak, because that's exactly what it is. Weak uptrend, no support for mid and small caps at their key moving averages, and the S&P closed below, two closes below the 21-day moving average. NASDAQ 100 held it, so a little bit of a mixed bag there, but not the strength that you're looking for after a follow through day. Let's check the trend gauge over here. Leaders are still acting okay. We had three come off the list, and less than half were down on the week, despite the S&P and the NASDAQ 100 being down 1.3% on the week. So, and I've got a list, a laundry list of stocks that could get added back into it, fundamentally sound stocks with fairly low risk entry points. So, only fair to keep, let's just say leaders are acting better than the indexes are. And again, when we've got seven big stocks pushing around the indexes the way they want to, we always have to quantify, do both as far as what's actually going on under the hood. Short term, though, we did downgrade from bullish to neutral. NASDAQ 100 holding on above the 21, all the other indexes below. 50-day moving average also downgraded from up to neutral. NASDAQ 100 above. S&P very close or right on the 10-week, within a couple tenths of a percent. Based on the rules that I established for long-term versus the 200-day moving average, I require a close above or below the 200-day by 1% or more to have a trend change, and we're not a percent below the 50-day moving average, so I'll consider the S&P neutral instead of in a downtrend. All the major indexes holding on above their 200-day moving average in various states of strength and or weakness. So what happened today? We opened dead flat on the indexes, and buyers came in right away. Strong first hour, but it faded right at 10:30, and then we just made a series all throughout the rest of the day into about 3:45 of lower highs and lower lows. That's a definition of a downtrend. And by the end of the day, the S&P 500 below the 50-day moving average and 21-day moving average. NASDAQ 100 held. Here are the final numbers. Our 8 ETF composite, the RG8, down 0.25%. S&P 500 went red. The last 15 minutes, a little bit of buying came in. So both the S&P and the NASDAQ 100 closed up 0.14%. Dow up 0.2%. Mid caps down 0.1%. Small caps down 0.23. Global 60/40 just barely positive, up 0.03%. Just about the same close between the all world stock index and the all world bond index. In-house GROTECTION in line with the S&P, up 0.14%, led by energy, dragged down by NVIDIA. And we'll take a look at those charts when we get to the 21 over 21. And of course, we'll check the tail of the tape. Let's get right into it. Here's the S&P 500. Let's go to a 5-minute chart so you can see what I mean by the flat open and the immediate strength out of the gate. Pullback bought, tried to bounce, but you can see the bounce didn't make a higher high. Another pullback, higher low, but didn't make a higher high. So at this point, what you've got is a intraday triangle. Lower highs, lower lows. So who wins? You look for a break of the triangle. Well, you can see which way it resolved. To the downside, a big, I don't know, a sell program, I guess you could say, hit the tape right at 215, and we didn't recover from that, although a decent bounce into the close if you want to call 8 points decent, 10 points, but not what the bulls wanted. So, but they say the opens are for retail and the closes are for the professionals. Well, if you're only counting the last 15 minutes, we got bought up. But the bottom line is, since the follow through day on 829, a couple of days of strength after that have faded. We tried to get back above the 21-day today and couldn't on the S&P. Didn't even touch the 50-day moving average. But note that it still has an upward slope. The 21 has rolled back over. So technically we could make higher highs and still not get back above the 50-day moving average. So the slope of the line is factored in. It does have a 10-week look back. So still trending slightly higher on the 50-day moving average. NASDAQ 100. We undercut and reclaim the 50 and the 21 today. Same thing on the 5-minute chart, early strength, and then lower highs and lower lows throughout the rest of the day. Little pop into the last 15 minutes again. But we did close just barely above the 50 and the 21-day moving average. NVIDIA has, and Apple too. Apple ran into 180 resistance, and let's take a look at Apple really quickly. Remember, we had that China, China saying that they didn't want any iPhones. They're trying to push their own products. Huawei, HUAWEI, is a big phone maker over in China. They had a breakthrough with chips, claiming their speeds were approaching other phone manufacturers, and the Chinese government is kind of pushing them. They say that they were able to make the phone without any chips from out of the country. So you know that the administration has been trying to curtail high speed and high intelligence chips to China. So China's striking back. And that's what caused the harsh sell-off Wednesday and Thursday on Apple, up to 180 today before reversing. All right, enough of that. Let's go to the Dow. Dow, two higher closes, but still below the 21 and below the declining 21 and the still uptrending 50-day moving average. Held that 34,000 level. We're just kind of in a bounce range here since the follow-through day again. But here's where the weakness comes in. Mid caps, fourth lower close since the high made on 9/1. Started with a big sell-off earlier this week and just never really recovered from it. Let me get this out of the way so you can see the weekly chart and what the weekly return was for these, down 3.5% on the week. Let's go to small caps, clearly below the 50 and the 21. Again, small caps clearly below the 50 and the 21, still holding the 200-day moving average, down 3.6% on the week. So again, that was where the weakness is. The mid cap growth and smaller large cap growth, we do a lot of fishing in that pond, so we don't want to see this. Small caps, for the most part, not liquid enough for us. If they do trade over $100 million in daily dollar volume, we can buy them, but you definitely want to see that strength. When you see weakness, that means you're going to get bad breadth numbers. Bad breadth numbers are historically tied to headwinds in the market, and that's really what we're seeing. So those are the 5 major indexes. Let's go over to the VIX. The VIX just kept saying it didn't care today. Was down all day. Ran into the declining 21. So 3 days, VIX tried to get back above the 21 and the 15 level and failed all 3 days, despite the fact that the days weren't comparatively good on the indexes. But the range has tightened over the last couple of days. So arguably you can say the VIX it's a volatility index. And if volatility is contracting, it's being reflected in the returns on the VIX. Let's go to the dollar. The dollar started off weak, gapping down. But you can see in the $5 chart, it got stronger. And what happened as the dollar got stronger? The market got weaker. That's the inverse correlation that's very clearly still in place between stocks and the dollar. 6 straight up days now on the dollar, making highs going all the way back to November of last year. That's a serious headwind for stocks. Let's flip to precious metals, GDX gold stocks up on the day, but closing at the bottom of their range. GLD, the yellow metal, basically flat, trapped between the 200-day moving average and the 50-day moving average. Silver, the big breakout on gap up, a long gone, now down 7 straight sessions. And Bitcoin, I'm reading that there's a bunch of shorts piling into Bitcoin. That often turns into a contrarian trade, so we'll see how that plays out. But for now, Bitcoin not looking good. Let's go to bonds. All bonds except the long bond traded in a pretty tight range today. The broad bond index just barely down on the day. The long bond index, or sorry, just barely up. The long bond index up 0.38%, although closing near the lows of the day. Just the reverse for yields. Yields down 0.5%, and the 10-year bond TNX basically flat on the day, but yields not coming off also. And as the week has gone along, the risk of a September interest rate increase has stayed low, but another interest rate increase by the end of the year is about a 40% chance. And the market, not liking good news, is liking bad news. So we're back to a bad news is good news economic impact on the bottom line of the market. That's our inter-asset correlation. Let's go to the tail of the tape. And we're neither on the bull case or the bear case. We're basically neutral now because we've got the S&P below the 21, while the NASDAQ 100 is holding on. Bad news from a contrarian standpoint, the AAII and the Investors Intelligence surveys both showed a reasonably strong tick up in bullish sentiment. That's a contrary indicator. You can see AAII up here, up 9% on the week, or 9 percentage points on the week. Day count, we're in an 8-day consolidation. That includes giving back most of the gains from the follow-through day. Third day below the 80 EMA, second day below the 21 EMA for the S&P 500. Expectations neutral now with the mixed mixed status on the indexes. Oil strong today. KRE banks started week ended strong. Utility strong. 30-year yield down as TLT was up. Dollar down, but mildly. Worst sectors were industrials and real estate. So as far as the portfolio goes, with that strong move off of the 50 and the 21 early, we bought QLD, great low risk entry point, faded as the day went along. We added to Uber that showed strength all day today. NVDL closed below the 21. We wrapped up the last very small profit for that, less than 3%. We still have for older clients, anybody that came in earlier in the year, still have 70% gains in the NVIDIA core position that we have. And then SPXL, with the move below the 50-day and the 21, we trimmed our exposure to the S&P index. And then we also trimmed half a Tesla with a 4% loss. We've held that for about a week and a half and can't get back above the 21 on the, if your glass is half full, at least it's holding the 50-day moving average. So mild tick down on our adjusted beta from 1.4 to 1.3. Check out the podcast this weekend. I gave a long talk about how we've got a data scientist intern, very impressive young man, running a bunch of detailed back tests for us on various portfolios to tweak the percentage of ATR and beta that make up our RVAB, Revere volatility adjusted beta calculation. So check that out, a lot of detail in there. Bottom line for the day and the week, strong first hour turns into an all-day fade. By the end of the week, the 21 and the 50-day, we had the S&P below, NASDAQ 100 above. Let's just, to sum things up here, bring up the S&P and let's put it on a 15-minute chart here. And well, let's go to a little bit longer, a 30-minute chart here. I'm going to get the follow-through day up, and basically where we are Here's the follow through day. Here's the bottom range of the follow through day. Here's the top range. So this is the trading range that we're in since the follow through day. Gave most of it back, tested the bottom of the follow through day range and held. Today we couldn't get back above or stay above or close above that 44.58 level I've been talking about. We closed right there, 44.57.49. So bottom line is we're in a trading range between 44.30 on the upside, 45.40. So 90 points, no, 110 points. And we'll see what next week brings. Let's compare that to the NASDAQ 100. Also a trading range. Here's the follow through day. We didn't undercut the bottom of the follow through day on the NASDAQ 100. So relative strength there against the S&P. You see the trading range there. The rest of the indexes don't look anywhere near as well as these do. There's the Dow. That's broken the bottom of the trading range. And we know how weak mid caps and small caps have been. So looking at things on different time frames really gives you a different outlook across the 5 major indexes. So that's what we're looking at for next week. Is how is the S&P 500 trading range going to resolve? That's the key question for next week. All right, let's get now to the 21 over 21 list. And I didn't replace any of the 3 stocks that got punted off. And the reason is I want to wait and see what the weekend sector analysis tells us. So you can see the weekly change for the remaining 18 stocks. Well, I'm going to show the 3 that got punted too. Up here in the upper right-hand corner, this is a weekly chart as long as the last 3 months of action. And here's what got punted. Bunge, BG, undercut but reclaimed the 21 by the close of the week, but from a relative strength standpoint, making lower highs on relative strength while prices making higher is a negative divergence that we really don't want any part of. Plus the growth. This had a shot, and this is somewhat related to the Russia Ukraine wheat thing, and we saw temporary strength across the whole ag ops a few weeks ago, but that faded and the growth numbers just aren't there. So this is coming off the list. Second one that got punted, it was really the standout weakling of the 21 over 21 for the week. AAOI, very volatile stock, declining. 21 rolled over, closed well below it, down 15% for the week. Still really above its breakout if you look at this 1148 level as the breakout. But certainly gone. And also punted NVIDIA, 2 closes below the 21, holding the 50-day moving average, but this isn't a 50 over 50. That's a 21 over 21. Keep it close to the list because we still have that legacy position with nice gains, but down 6% on the week and really not showing much strength. But if you jump out, if you zoom out, you can really see all that's going on is a triangle. Which way will that triangle resolve? That will depend on whether or not we end up cutting the remaining NVIDIA position or if we end up adding it back and increasing it. So those are the 3 that got kicked off. Let's go through the remaining 18. If they've got a red flag over here, that means that we hold them in-house. And we'll start off with Uber. On a generally weak day of the market, this showed consistent accumulation all day. We added 2% early, got a 5% position now. This is our biggest individual stock position. Great growth numbers here. They've figured out how to profitably run a business, and after a low volume 3-day pullback, we had a nice bounce off the 21 and the 50-day moving average over the last couple days. Note relative strength at a higher high versus the price from earlier in the week, late last week. You always want to see that. That's a positive sign. So Uber giving us everything that we want with our 5% position there. Splunk, great action, finally showing its first down day since its earnings gap higher. We're looking for a way to get into this. The way we will look to get into it is a 60-minute stochastic cross. Let me bring up the 60-minute and let me turn stochastics on very quickly. And we're nowhere close to that. Gentle pullback, strong stock. Look at how this is just a thing of beauty. The way this for multiple, 2 weeks hanging above the 60-minute stochastic and overbought, that shows serious strength. And we don't buy extended, especially not in this market. Market's not really rewarding any strength, but the volume patterns are there. Uh, Growth is there for next year. When you see a growth rate higher than the PEG rate, or the PE ratio, that means a PE, the PEG ratio, PE divided by growth, is less than 1. That's very attractive for a growth stock. So we're keeping an eye on this, looking for a way to sneak into it. Really looks good. Fastly, we bought this yesterday on that 60-minute stochastic, outside negative reversal day, but on lighter volume, not really a concern. We've had 4 days of a lighter volume pullback after breaking out of this ascending base, and really all we've seen is we're still to the top of the pivot plus 5% range. So good stuff there out of Fastly. You can see for the week down 4.6%, but based on the previous gains that it had, that's not giving back much at all. You can see it's actually an inside week. Next up, CCJ, Cameco uranium stock, basically up about 1% for the week. But since this breakout above the 35 level, it's been acting very well. LNW, this is one that undercut but reclaimed the 21 the way you want it to, undercut it on lighter volume, got back above it on average volume, down 1% for the week. Still looking very good. Interactive Brokers up to 2.1% for the week. Great looking chart, undercut but reclaimed last week and showed very good relative strength this week. Palo Alto, considering replacing this with CrowdStrike, but it had a good week, and it's really had a good 2 weeks now, up 2.5% on the week. That is cybersecurity is a sector that's acting pretty well. Arista Networks, gentle pullback after a nice breakout on its earnings report, barely down on the week. CEIX coal stock, just a beast, riding the ADMA higher. Beautiful thing when something rides the ADMA higher, up 3% on the week. Lilly, beautiful looking stock, breakout again after its earnings gap up. These weight loss drugs that they have are very attractive, and we're looking to sneak into this and NVO, as they're both acting extremely well, making higher highs after both of them gapped up on earnings. These drugs are now being looked at as being used for multiple. There already was a trial that showed that the Novo drug reduced cardiovascular events, and they're now being looked at treating alcoholism and Alzheimer's. So um, we'll get into them at some point. And we're just looking for a reasonable entry point. AppLovin, APP, inside week, looking good. Celsius, probably the number one growth stock in the market now, continues to make higher highs, up 4% on the week. Axon, nice recovery off the 50-day moving average and the 21 last week. Higher highs since its earnings report. NRGU, it's been the best performer in the portfolio. We've got 3 buys on this, one up 18%, one up 15%, one up 8%. Looking good. Had a little breakout out of this 3-day range today. If we get another gap up next week, it'll be almost 4 ATR extended from the 21, and we'll take some off into strength. And then look to reload on a pullback. That's kind of the way we've been playing this week, this year. But this has gone from 426 to 534 now over the last 2 weeks. It'll pull back again at some point. VRT, we snuck into this week, reversed at 40 today, down 1.7% on the week. Inside week also. Lots of inside weeks on some growth stocks. The best, and this isn't a growth stock, it's TBT. It means interest rates rose. Not something we'd like to see. We do own this. This is basically a hedge on the portfolio. Interest rates go up, this goes up. Interest rates come down, this comes down, but the rest of the portfolio goes up. It's been a pretty clear inverse correlation. And finally, Weatherford. We know oil stocks are acting well. This has been on the fact that it's number one. It's been on here since we saw this breakout here almost 3 months ago. And despite how good this chart looks, NRGU, I brought up at least 30 oil stocks today, and NRGU outperformed every one of them since oil started this last uptrend. It's just the best, broadest way to play it without individual stock name risk. And that is going to wrap it for the week. Remember, we'd like to hear from you. If you're watching us on YouTube, please like and subscribe. It helps out our algos. Maybe 10% of the people that watch these videos like it, and that's too low. You guys can do better. We put them out there. They're free. They're informative. We get good feedback, but just click the like button. That's all we're asking. Or you can hit me up, Don at revereasset.com. My partner, Dan Stewart, if you're interested in becoming a client, Dan at revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much you can keep. As the uptrend from the follow-through day weakens, we kind of have done a little bit of a U-turn from growth mode into a bit of a protection mode as we've broken the 8 and the 20, or the 8, the 21, and the 50-day moving average on the S&P 500. Clearly not the best case, but bottom line, if you look at the chart, we're just in a trading range since that follow-through day, and we're trying to give the market the benefit of the doubt because leaders are holding up just fine. Uh, Definitely had better week than the indexes on a all-in-all basis. So that's we're optimistic until proven otherwise, but it definitely is downgraded to a weak uptrend. And with that, I'm going to wrap up the Market Insight video for the week ending Friday, September 8th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great weekend.